If this is your first time on the channel and you want to know everything there is to know about living in Redondo Beach, California and the surrounding South Bay area, then hit subscribe so you can stay current in what's happening in Redondo Beach. My name is David Coe. I have lived in Redondo Beach for over 30 years and been a realtor for the last 20. Myself and my team at the Coe Real Estate Group, we love to help people navigate the move here to Redondo Beach. And whether that's 9 days or 900 days away for you, we would love to be connected with you. All of our contact info is in the description, and we'd be happy to help you make a smooth move to Redondo Beach or the South Bay area. Hey everyone, David Coe, the Coe Real Estate Group. Hey, welcome back to our channel where we love talking all things home ownership here in Southern California. Today I've got my good friend Glen Kangas here. He is the warm-hearted, cold-hearted appraiser, but we're going to talk about some issues relating to appraisals. This has been a weird market, Glen. I think it's probably the best way to describe it. A lot of fits and starts, a lot of different segments that seem to be moving differently than others. But before we jump into that, why don't you introduce yourself and just kind of tell everyone, how long you've been doing this?
My name is Glen Kangas. I'm the cold-hearted appraiser because our job is to be analytical, right? Our job is to say, this is what the market says. It's not what I say or what I feel or whatever. It's the numbers are the numbers, the market's the market, and our job is to interpret and understand the market so that we can explain it to you, the reader of the appraisal. So I've been doing it for 33 years now, all in Southern California, all over Southern California, as a matter of fact. And I love being an appraiser. So that's, I enjoy being that independent, unbiased person. I enjoy the variety of what I do. I enjoy being in a lot of different homes in the different areas of Southern California. So I love doing it and I love talking about it. So thanks for having me on, Dave.
Well, you might be a cold-hearted appraiser, but you're a warm-hearted human, which is why I wanted you here today on the show.
Thank you.
You're welcome. So let's get into it. Look, I think one of the biggest things that, even as an agent, right? Like, someone says, hey, what's my property worth? Can you comp this out? Right. And it's been a weird market, there are certain properties that seem to be going up, certain seem to be going down. Some properties are getting multiple offers. Some are sitting forever. Like, what kind of challenges is that bringing up with your day-to-day business right now?
Yeah, well, it makes it, hard as an appraiser because when you start looking at sales data and you're like, boy, that one should have sold for more or less or whatever. And why is there a difference between those two? They don't seem different, and so you have to do a little more research. But I think the best description has been, I heard a realtor use the term tornado market, right? Tornado comes in and it grabs one and not the other, real close to each other. I think one of the driving factors that I've seen is when interest rates went up in 2022, and they've kind of stayed up for the most part, people became much more particular about what they were willing to buy and not buy, and what they were willing to pay for a house that might not be perfect and not. So right now with the interest rates, even though they're, better than they were, they're still not down to where, they've been for a long time. So they don't want the bad location. They don't want any kind of issues with the house. They need 2 baths, not 1 bath. They need, they're just like, no, I'm not going to buy it at this interest rate. I'm just not. So I think we're seeing a lot of that. We saw a massive increase in the discount for bad locations once interest rates went up. When the market was hot, it was, I'll take it. And now it's like, no, it's not a great location. I don't want it. Or if I do, it's going to be a big discount. So we see that. But so it definitely makes it a challenge. People say, how's the market? And I always say, which one, right? There's not one market, tons of markets. Could be price range, type of property, location, area, a million things can drive what makes the value for your property.
I was looking at a single family home in Van Nuys yesterday, and man, there's one home that was just an outlier. It was just like $40,000 more than everything else, and I couldn't figure out what it was. I went back and looked at the day that it went under contract, and then I looked at the mortgage interest rates on that day, and it was the day that the rates hit 5.98%. So all of a sudden on that day, whoever that buyer was, rates hit sub 6%, and I'm going to guess it was a multiple offer situation, and people probably bid up a little bit because rates were lower and that costs were lower. And then everything else was in the last 30 days, and rates had moved up another 50 basis points after that. So it's funny when you mention tornado markets that
Yeah.
in a geographic area. I think that the tornado has been more over time, right? Depending
Right.
on when that property went under contract,
Yeah.
might really influence what the value of the home was.
Yeah. Well, you definitely see that with the interest rates, and you see, a sharp uptick for a few days or a downtick for a few days, and then a readjustment. People jump in and do something, or they back out if it's spiked up. So you definitely see that. I think you see too the pricing has become a much more important thing with the market like it is. And someone who doesn't price properly, once a property's tired, it's not going to sell for what it would have sold for. So one of the things we do as appraisers is we look at all the data, and we do recognize outliers. You're like, when you look at all the data, you're like, wait, we would expect it in that condition, in that location, that size to be kind of from here to here, but that one's way up here or that one's way down here. And so we number one, try and figure that out. Number two, um, that might be one that you end up not using because it's not normal. It's outside the market. And there's, could have been a simple explanation like that. Could have been a divorce sale or some kind of motivated sale when it's why it sold low. But, we're trying to tell you what the market's doing, not what that one property's doing. So, but it definitely makes it more interesting, let's say.
Well, speaking of outliers, I think one of the things that we've been living with is just a severe lack of transactional volume. I think we're like at 60% of normal transactions over the last 3 years compared to a regular market,
Right.
which means that in a lot of properties where we're trying to price them out, we may not have comps in an area that's considered like the standard. I'm going to go half a mile out. I'm going to go back, 6 months, and I'm going to look at comps. What do you do when you use kind of your standard parameters and there's nothing, or maybe there's only one thing and it's not even really a comp? How do you get around that?
Yeah. It's definitely become challenging in situations like that. And you like the easy appraisals where there's a lot of data, but there's less and less of that nowadays. So when we have that unique situation where there're just no comps currently, number one, we go back in time. I like to go back in time versus out first, because the sale on our street that's very similar that was 2 years ago instead of 6 months ago
Yeah.
is still a great piece of data. And if we can get a good sense of what the market's done since then, we can use that to help say, hey, the market's similar, the market's higher, the market's lower for that segment. That's a great piece of data. But then we pair that with going farther out to find something similar that's just in an adjacent neighborhood, an adjacent city there. And so we do that. Now, when we do that, we have to look at and compare those markets, those neighborhoods. Are they similar price neighborhoods? Is that neighborhood where we found that good comp? Does it sell for more in general or less in general or the same? So we have to do some extra work for that. But we likely have a combination of the dated sale that's real similar nearby, and then a more recent sale from further away. We still want to have a similar age home, a similar size lot, things like that if we can. And then the other thing we do is just, we do that, we do this. Hey, did we sell 5 years ago? And how did we sit in the market overall then? And where are we now? Can we put it there now? So we end up with 3 or 4 different methodologies of selecting comps and analyzing the market to figure out, okay, there's not a lot of great data, but based on all of this, we can reasonably say that here's where we should be. It's just a little harder to put that all together. And we also expand like the parameters of our search. So whereas we might, go 300 square feet either side of our property in square footage of the house, we might go 500. And again, when you've got the dated comp, when you've got the other neighborhood, and then some stuff a little bigger than normal or smaller than normal, they allow us to kind of surround the value and go, okay, well, we know it's more than that because it's bigger. We know it's less than that because it's smaller. Um, and we can take it from there. So just a little more creative than when there's good data.
I think like us, we've been having to work twice as hard for half as much money. It sounds like you're in that same boat right now.
Yeah, yeah. That's what's your fee? It's like your standard fee assumes moderate complexity, maybe or whatever. But the simple one, you earn more per hour, and the tougher one, you definitely earn less per hour. So, we definitely have that situation going on, and just the change in the appraisal market. The more data there is, and the simpler one is, the less likely they're going to need an appraisal. They're going to do an appraisal waiver or something like that. So you're getting to where a higher percentage of appraisals are more complex, just
Makes sense.
because they don't need an appraiser when it's a pretty simple, straightforward deal necessarily. So
Right. One last question for you. People are always wondering, look, I want to renovate my house, but where should I spend the money? From your perspective, what are some of the home improvement renovations that you think have more value versus less value when you're appraising a home?
So for appraising a home, I mean, even what we see in the market, right? For if you're going to sell the home, simple cleanups, remove the clutter, throw some flowers in the front yard, clean up the exterior, some fresh paint. Those are simple things that your house will sell for more. If you're just appraising and refinancing, again, we're supposed to be independent and unbiased, just look at the data, but a clean, organized house and a clean, organized yard with bright flowers, you walk away feeling better about it. So simple stuff like that is always good. As far as improvements and things, the things that most buyers want and that we see the data tell us is kitchens, bathrooms, and master suite. If you've done the kitchen nice. If you got a master suite where a couple can walk in and say, "Hey, wow, this is a great place for us to retire at the end of the day." Those things seem to make stuff pop more than anything as far as an improvement. The market expects the roof not to leak. It expects everything to work. So those are things that you just have to have. But the things that seem to pop the most are those kind of things: kitchen and kitchen, bath, and master suite. And just again, fresh paint, carpet, simple stuff like that. That doesn't cost a lot, but those things seem to improve the value quite a lot.
Well, I think it's the same thing with a buyer. I always tell, my sellers that someone's going to make up their mind 30 seconds from when they walk in the front door. And that's
Right.
because they already have an impression of what your house is like from when they parked on the street, walked in your front yard, they open up the door, and they kind of know right then and there whether they want to buy the house. And at that
Right.
point forward, everything beyond that either reaffirms their decision to buy or not buy the house, right? Like that's really
Right.
what's going on. So I'm glad to hear that appraisers can also be impacted by that, right? Like,
We're human.
you find more value in a home that looks like it's been better kept up.
Yeah. Yeah. There actually used to be a realtor that would talk about that 30-second thing when in their introduction. And if I went after them, I would go say, I can make that determination in 8 seconds. I don't need 30, as an appraiser. But it's true. We're all human. We're all impacted by that just psychologically. So those things matter whether you're refinancing or selling. You want to make it to where people feel good when they walk in.
Awesome. Well, hey, look, I really appreciate it. This has been a great conversation. Glenn, if someone wanted to contact you, what's the best way for them to reach out to you?
Two ways. My website is gaappraisalsinc.com. You can also go to coldheartedappraiser.com. It'll send you there. Or
Nice.
just my email, glenn@gaappraisalsinc.com. Those are all great ways to get a hold of me.
Awesome. Well, hey, we're going to put that contact information down below. As always, thank you for watching. If you enjoyed this content, you want to see more of these videos, hit the subscribe button down below, hit the like button below, and if you ever do need an appraisal, feel free to reach out to myself, reach out to Glenn. We'd love to help you out. Glenn, thanks so much for your time today.
Thank you, Dave. Appreciate being on with you.
Awesome. And thank you for watching. We'll talk to you soon.